This video explains the entries and/or transactions needed in your general ledger and in OpenPoint to record the direct sale of material from your inventory. When a utility sells material from inventory, such as the sale of a valve to a plumber or wire to an electrician, the utility prepares an accounts receivable invoice in their accounting system that typically includes the amount for the stock of item itself, as well as any material overhead or possibly sales tax, depending on the situation. As far as the general ledger is concerned, entries are recorded when the accounts receivable invoice is entered into the general ledger, typically crediting the inventory control account, stores clearing account, and sometimes the sales tax account. These entries are done outside of OpenPoint. The sale price for the material itself can be based on the average cost of the inventory on hand in OpenPoint at the time of sale, or a different amount as determined by the utility. If the sale is based on the average cost of inventory on hand in OpenPoint at the time of sale, and the direct sale transaction is entered in OpenPoint at the same time, entries required in the general ledger will be fairly straightforward because the amount of material on hand is the same. If the sale is not based on the average cost of inventory on hand in OpenPoint at the time of sale, or if the direct sale transaction is not entered into OpenPoint until a later date, after other transactions impacting the average unit cost of the inventory on hand have been entered, the general ledger entries have to be thought through a bit more. It is important to note that the direct sale transaction in OpenPoint will reduce the value of the inventory on hand by the average unit cost according to OpenPoint when the direct sale transaction is created. Let's walk through a direct sale transaction in OpenPoint and then talk about the corresponding entry that will be done in the accounting system through creation of the accounts receivable invoice. So in OpenPoint, in the inventory module, we're going to go to this warehouse where the direct sale transaction is going to happen. We're going to do a direct sale transaction for some conductor that got sold to an electrician. So within our inventory item number, we're going to go to the direct sale transaction, put in your description, typically the sale to the electrician, how much conductor you sold. We're going to do 100 feet, which automatically brings up the value of what that wire is according to the average cost in the inventory system. Then you're going to put in what the client sale amount was. So depending on if you added material overhead or sales tax to the cost of the average unit in the inventory system, you'd want to enter the total cost that you sold that inventory item for. In this instance, we're just going to add $10 for material overhead, and we're not charging sales tax because this electrician isn't purchasing this for resale. They're purchasing it to use it themselves. Then for the account number, it doesn't really matter what account number you use because the direct sale transaction in OpenPoint doesn't come into the inventory entries report later. But for the transaction reference, you could put the accounts receivable invoice number if you'd like. And then here you can see that the count is going to be reduced by 100 feet, and then the value is also going to be reduced by the amount of that 100 feet that's being sold directly to the electrician. So as noted in OpenPoint software, there is an inventory GL entries report provided to assist in the creation of general ledger entries to record inventory transactions initiated through OpenPoint. However, the direct sale transactions are intentionally excluded from this report because it is assumed all general ledger entries for direct sales are handled outside of OpenPoint, using that accounts receivable invoice from the accounting system. So in the example that we did for the accounts receivable invoice, the inventory control account, or account 154 in most utilities, that's the inventory control account, would be reduced by $105. But remember, we charged the customer $115, so that extra $10 for material overhead is going to be credited to the store's clearing account, which is typically account 163. So in order for the OpenPoint system's inventory values to remain in sync with the utilities general ledger inventory control account, it's recommended that the accounts receivable invoice in the general ledger be done at the same time as the direct sale transaction in OpenPoint. If a utility has further questions about direct sale transactions, you can contact OpenPoint support, or if it involves more detailed accounting assistance regarding a direct sale, please contact your auditors or the Public Service Commission of Wisconsin.